Hello, everybody. Welcome. Nice meeting you. I'm Dr. Charles Kim, CEO of European Prestamo Group Company Limited in Frankfurt, Bruxelles, Luxembourg, Amsterdam, London, New York, Chicago, Hong Kong, Shanghai, Shenzhen, Guangzhou, Beijing, Xi'an, Shenyang, Harbin, 서울, 도쿄, 뱅콕, 자카르타, 시드니, 시드니, 이스탄불, Paris, Barcelona, Lisbon, Egypt, Cairo, Casablanca. Welcome very much. Today is the ledger. Ledger is the general ledger. Understand that of the central bank. Not is the ledger is the company. This is the ledger account. Ledger account is the on ledger account of ledger account. Today is the on ledger account. You know very well. General ledger is a book and the collection of account which account transaction are recorded under double bookkeeping. Each amount has an open or carry forward balance and would record each transaction as either a debt or credit in separate column, maybe debt column and credit column, and the ending or closing balance. So on ledger account, of ledger account is the of ledger account is big science. On ledger account the same as a big science, but today is we continue to the on ledger account. Maybe of ledger account is the special one. Of ledger account is through the maybe cleaning process and also the settlement procedure. That's very complicated, but this is the next time we can continue to onshore account and offshore account. Onshore account, offshore account is the today is we are the concentrated to the tutoring coursework on behalf of our client, our customer, and my friend together. And also here, on balance account and off balance account. Maybe is the off balance account sheet and in cognitive leverage, off balance account. Off balance account is a very simple one. Maybe if you have over there is a projector. Projector is your company is directly do all thing of the build up of that project. Maybe nuclear power plant. 10 billion US dollar you can invest over there, but the sometime maybe your company is the raising of a fund. Fund is if raising of a fund, this is the debt. You understand? Debt in this case is the debt amount is the 10 billion of your double bookkeeping over there. And because of that, that is the reduce of your debt of your company in order to show of your company is the debt ratio is the small debt ratio in the higher capital. And also you can set up the registration of special purpose vehicle to build up of the nuclear power plant. Total investment 100, maybe 10 billion. This is for example. In this case, maybe usually it mean is asset or debt or financing activity not under company balance sheet, not under your company balance sheet. Total return swap, and here total return swap link with the total return swap, and maybe credit default swap you need to understand. And on the example of the off balance sheet item, credit default swap and the total return swap is meaning that very simple. Credit default swap is only is the credit risk. You understand? In order to the maybe curve of credit risk, you can maybe buy up the insurance maybe insurance or the similar insurance of investment bank. You understand? Maybe this is the standard of USA financial system of lecturing courseware. The total return swap is the credit risk and the marketing risk together. You understand? In order to the curve of the credit risk and the marketing risk. And some company has may has been significant amount of off-balance sheet asset liability. Some company, just if I said of the maybe nuclear power plant is the 10 billion. This is significant amount. Maybe 20 billion, much more. For example, financial institution often offer asset management or the brokerage service to their client. The asset managed and brokered as a part of the these offered service open security usually belong to the individual client directly or in trust. Although the company provide the management depository or other service to the client, company itself has no direct claim to the debt asset. You understand? Not directly, but this is through the special purpose vehicle. So it does not record them on its balance sheet. They are off-balance sheet asset. Maybe on-balance sheet asset is they can control the curve of themselves, but the off-balance sheet is the other. Although they are asset, but this is already moved into the balance sheet of the special purpose vehicle, while it usually has some basic fiduciary duties with respect to the client. Financial institution may be report of balance sheet item in their accounting statement of formally, and may also refer to asset under management. A figure that may include on and off balance sheet item. On balance sheet item, off balance sheet item. It's meaning that this asset already is moved into the special balance of special purpose vehicle. On the previous account rule, both the United States, this is USGAAP, and internationally, IFRS operating lease. The lease is the operating lease and the financing lease. Operating lease is different one. Operating leases were off-balance sheet financing. Maybe object financing program over there is the finance operation, financing lease and operation lease. The similar, but the financing lease is when through the object financing program over there. This is the maybe the Boeing 787, 3 billion. You understand? In this case, it's two-way. One way is the object financing program. Is this ownership. Ownership is your airline company, the aviation company. Aviation company, the ownership. But you can give back. You understand? Give back leasing. Maybe this is a mortgage. This is QG, maybe fixed asset is mortgage. Mortgage give us, and also we can pay for this money. Pay off the airline manufacturing Boeing company, and the Boeing company. Okay, no problem. Boeing company is the settlement, but this is the ownership is your aviation company. This is the financing lease, and maybe operating lease. Lease is like this. This is the we buy. Well, maybe the Boeing from the Boeing company we can buy, and also paying off of the total money to the Boeing company, and then we are ownership and also lease to the aviation company. In this case, there is a two-way. In this case, is the operator lease were of balance sheet financing. You understand? This is of balance. Really speaking, is the aviation company, but ownership is a legal ownership. Ownership is the belong to the lease company. You understand? Lease company. Under the current accounting rule is ASC 842, IFRS 16. Operating lease are the under balance sheet. Financial obligation unconsolidated, unconsolidated subsidiary, consolidated subsidiary, because they are not wholly owned by the parent, may also be balance sheet. You understand? Because of that, maybe if you can't understand of disclosure, you can study of the object financing program of the financing lease and the operating lease and sell and lease back. You understand? Sell and lease back like this one. And such obligation were the part of the accounting fraud and error. The formal account distinction between the unbalanced and off-balance sheet item can be quite detailed, you understand, and will depend to some degree to the management judgment. But in the general item, an item should appear on the company's balance sheet if it is an asset and liability at the company own is legally responsible. Uncertain asset and liability must also meet the test of being probable and measurable and meaningful. For example, company that is being sued for the damage would not include the potential legal liability on its balance sheet until the legal judgment against it is likely, and the amount of judgment can be estimated. If the amount at risk is small, it may not appear. This is the for example, is the on balance sheet and off balance sheet, and maybe the main company. Main project development company and the special purpose, between the main project development company and the special purpose vehicle, and maybe aviation company and the leasing company, between the leasing company and the aviation company, how to do, and the manufacturing company and the project developer. You understand? This is the other unbalance of balance sheet. Balance sheet, you know very well. Financial statement, balance sheet, and profit statement, cash flow, maybe cash flow statement like this one. And the difference between on balance and off balance sheet. What is difference one? Traditionally, bank lend to the borrower on the tight lending standard. Lending term and condition is very strictly term and condition, and keep loan on their balance sheet and retain credit risk. You know, this is the bank is the loan give you, this maybe 5 billion loan give your company, your corporation. In this case, we have risk. You understand? When you can maybe make big money, or maybe no make money, or the default, we don't know. That is a risk. Risk is you already give us up some mortgage or pledge, but this is the credit risk. The marketing risk is different one, and the systemic risk and the unsystemic risk and different one. And the risk that the borrower will default, be unable to indicate the loan on the asset side of their balance sheet. However, securitized loan are the represented of balance sheet. You know, securitized loan. You understand? Securitized loan. Securitized, if you understand, maybe the MBS mortgage loan. Mortgage mortgage back maybe security, like this sell to this is already this asset, this loan, maybe is your bank is the mortgage loan 5 billion. This is the already this the credit risk is the sell to the credit default swap. You understand? Credit default swap. Because of the securitization involve selling in the loan to a third party, the loan originator and also the borrower being the first two party. Banking disclose detail of the securitized asset only in not to their financial statement. Banking example. Bank may have a substantial sum of balance sheet account and also distinguishing between these account may not seem obvious. For example, when a bank has a customer who deposit 1 million in a regular bank deposit account, the bank has a million liability. Maybe is the you deposit maybe saving of 1 million. This is the your asset, but the bank is the 1 million is the liability. Liability. You understand? Bank is debt. You are maybe asset and creditor. You understand? If the customer choose to transfer the deposit to the money market mutual fund account sponsored by the same banker. You understand? In this case, they already this is put into the mutual fund over there. Because of that, the bank is already this data burden 1 million is the transfer into credit risk transfer into the mutual fund. But mutual fund, but the other bank is already they will buy up the credit default swap. The 1 million would not be a liability of the bank. The bank is already free of the 1 million burden. Not 1 million, maybe 10 billion like this one. And but the fund are used to the purchase stock. The fund company, the fundraiser, and the fund management, this 1 million is put into the mutual fund. Mutual fund is will buy up a stock, maybe the government bond, and invest another area. And the stock is similarly not owned by the bank. This is already is the move into another the mutual platform. What do you call platform? Platform is the mutual fund platform over there. And do not appear as an asset or liability of the bank account. You understand? This is already risk is moving into over there. But the bank already they have. You understand? Maybe they can invest or the maybe discount and also this marketing risk and the credit risk is transferred into them. Marketing risk and the credit risk is transferred into the maybe short company or the insurance company or the investment banker. Investment they will receive a premium and sell to their product of the credit default swap. If the client subsequently sell to the stock and deposit to the proceed in a regular bank account, this would not now is again appear as the liability of a bank. Bank is the liability, but at the same time is bank is the asset. Maybe the double bookkeeping of the over there the asset because they are already provide of the investor account over there. Investor 1 million. This would not again appear as the liability of a bank. As an example, UBS has CHF. CHF is the Swiss franc, and 6 billion underdrawn irrevocable credit facility of its balance sheet in 2008 years, and 6 billion. And Citibank has 960 billion in upper balance sheet asset in 2010 years, which amount to 6% of the GDP of United States. Offshore bank. Offshore bank is a bank regulated under international bank license. Offshore, the offshore bank, you understand now is very important. Offshore bank and onshore bank, same inside of same country, but client is different. Understand? Client different one. Often called what they call is offshore license, which usually prohibited a bank from the establish any business activity in the jurisdiction of establishment due to the less regulation and transparency. Account with offshore bank were often used to hide uncleared income. You understand? Uncleared income. Since the 1980, jurisdiction that provide financial service to the non-resident on a big scale can be referred to as the offshore financial center. You understand? If you maybe come to the maybe the Japanese people come to the USA over there, they can maybe the immigration and also they can card of nationality and the green card, you understand, and also the temporary stay over there, visa, maybe 1 year's business visa, 3 months business visa, and 1 month tourist. Like this people is the maybe green card people is different one. But the business visa, 1 year's business visa, maybe six months business visa, for 3 months business visa, like this is just non-resident. You understand? Resident is the nationality. They have sovereign people, sovereign people. But the outside the sovereign people come there. This is a non-resident. They have income. You understand? They have income, but they have income, but sometimes the hide uncleared income they have. You understand? Since the 1980s, jurisdiction that provide financial service to the non-resident on the big scale can be referred to as offshore financial center. This is OFCs. OFC also levy a little or no corporation tax. You know, company is the same. 1980 and 1990 is the company didn't levy up the company income tax and the personal income tax, because in this case is you have option. Understand? Maybe USA make money and also you can maybe pay for the personal income tax. In this case, this is the maybe disposable income. Disposable income can USA deposit, no problem. But if you didn't maybe pay for the personal income tax and the company income tax, this money is the put into the offshore bank account. Understand? No, bank account of offshore bank. This is the what you call we saw the offshore financial center. You understand? When worldwide increasing measure on the combating financial terrorism, combating the financing of terrorism and anti-money laundering (AML) is the compliance. This is compliance. This compliance is the regulatory. You understand? Regulatory. The offshore banking sector in most jurisdictions was subject to the change in regulation. Since 2002 years of the Financial Action Task Force issued the so-called FAA. This is the FATF. TF is the task force. It's a Financial Action Task Force. blacklist of non-cooperative country or the terrorism territory. It's NCCTS, which is perceived to be non-cooperate in global fighting against money laundering and terrorist financing. Account held in the foreign offshore bank is often described as the offshore account. Typically, an individual and company will maintain of the offshore account for the financial legal advantage it's provide including but not limited to strong privacy, including bank secrecy, little or no corporate taxation by way of tax haven, protection against local political or financial instability, while the term of the originated from the Channel Island being offshore from the United Kingdom, and while the most offshore banks are located in island nation to this day, the term used figuratively to refer any bank used for these advantages, regardless of location. Thus, therefore, some bank in landlocked Andorra, Luxembourg, and Swaziland may be described as offshore bank. Offshore bank has previously been associated with underground economic and organized crime, tax evasion, and money laundering. However, legally, offshore bank does not prevent asset from being subject to personal income tax on interest, except for the certain people who meet fairly complex requirements such as perpetual traveler. This is non-resident perpetual traveler. You know, the other they can pay, they can get up the visa. Visa is the other perpetual traveler. This country is he is a non-resident, but he is the perpetual. In his life, he have a big amount of money deposited here on the non-resident account, the offshore account, and then he can maybe study this one is a traveler, traveler. This is the perpetual traveler. The personal income tax law of many countries, e.g. the France and the United States, make no distinction between the interest earned in local bank and also that earned abroad. You understand? And the persons subject to the U.S. income tax, for example, are required to declare under penalty of perjury any foreign bank account which may or may not be numbered bank account. They may have offshore bank are now required to report income to the many other tax authority, although Swaziland and certain or jurisdiction retain bank secrecy regime. That can be more difficult to deal with. This not make the non-clear declarance of the income by the taxpayer or the evasion of tax, that income legal authority, and many offshore financial center has recently been important colleagues to onshore tax authority and law enforcement against of wrongdoers. Following the September 11 attack in New York by the World Trade Center, there have been many calls to the increased regulation on international finance, in particular concerning offshore bank, offshore financial center of the cryptocurrency and the clearinghouse such money follow. Most certainty involved the banking system has happened of the regulation and the control being circumspect, be subject to taxation. Weakened bank secrecy. This is the point. Since the start to the surveying offshore jurisdiction on April 2nd, 2009, the Organization for the Economic Cooperation and Development, OECD, at the forefront of the crackdown on tax evasion will not object government using stolen bank data to track down tax evasion using offshore center, such as of in the 2008 years Liechtenstein taxpayer, the result of sharing of the confidential UBS bank detail about 285 clients suspected of willful tax evasion by the United States Internal Revenue Service was a ruled violation of the both Swiss law and also country constitution by the Swiss Federal Administrative Court. Nonetheless, OECD has removed 18 countries, including of Swaziland, Liechtenstein, and Luxembourg, from so-called gray list of countries that could not offer sufficient tax transparency, and has categorized them as the white list country, black list, gray list, white list. That do not comply may face sanction. A notable exception in Panama, whose kernel provides it with a unique type of the immunity to international press, given the enlargement of the kernel accommodate large shipping. It's unlikely that Panama would succumb in the possible futures to international press toward transparency. Offshore account, you need to understand. Scope of offshore banking. List of offshore financial country, centuries. Offshore banking constitutes a sizable portion of the international financial system. Experts believe that as much as half the world capital flow through the offshore center, offshore financial center are said to have 1.2% of the world population of the hold 26 of the world wealth. You understand? 1.2% people is the world total wealth of the 26%. Now it's 30% more after quantitative each country. Include 31% of the net profit of United States multinational, a group of the activists state that 20 trillion UK pound is held in offshore account, yet the real figure could be much higher when taking into account Chinese, Russian, and the U.S. deployment of capital international. These often regulated figure have not stood up to the scrutiny. However, and also the no has the black hole theory that the capital is hoarded away from financial and the tax system in offshore financial center. Much like a criminal using wallet identified and seized as a proceed of crime would be counter intuitive for anyone who hold the asset unused. Moreover, much of the capital following through the vehicle in the offshore financial center is the aggregated investment capital from the pension fund, institutional and private investor, which has to be deployed in the industry around the world. Trillions in deposit and securities are held in the offshore bank. You understand? Deposit, cash deposit, and also they hold and offshore bank hold in the many trillion. Mostly they are international business company, IBCS, and also trust company. Trust company. Not only the offshore trust company, and among the offshore bank, Swiss bank hold on business company. Estimated 35% of the world private and institutional fund, 3 trillion Swiss franc, and of the Cayman Island, about 2 trillion and US dollar in deposit in over there, are the 50 largest bank center globally in terms of deposit. However, data of the Swiss National Bank show that the asset held by the foreign person in Swiss bank account declined by the 28.1% between the January 28 to the 29. This is a long time ago. Now is quite different because the other Swiss National Bank already is agreed to the transparency open to the maybe every country of the Swiss bank account. Banking advantage. Offshore banking provide access to the politically and also economically stable jurisdiction. Will be an advantage for the resident of area where there is a risk of the political turmoil, who fear their asset may be frozen, seized, and disappeared. During the 2001 years Argentina economic crisis. However, it's also the case that the onshore bank offer the same advantage in terms of the stability. Some offshore bank may be operate with lower cost base and also provide higher interest rate than legal rate in the home countries due to the narrow range of the service provided, and also the technological advancement among the similar line to the challenger bank such as the Revolt and also Sterling. Advocate of the offshore banking often characterize government regulation such as a form of tax on the domestic bank, reducing interest rate on the deposit. However, this scarcely true now. Most offshore countries of the very similar interest rate to those that are offered. Onshore and also offshore bank now have considerable compliance requirement, making certain category of the customer, those from the USA or from the higher risk profile country, unattractive for the different region. Offshore financing is under this new industry along the tourism, which is the geographically remote island country can competitively engage. It can help develop country source investment and create growth in their economy, and can help world financing to and from the developed and developing world equally well resourced, and also develop offshore financing center country such as New Zealand and Singapore of a safe and reasonable, well administered background for their similar financial service. Interest is generally paid by the offshore bank without the tax being deducted. This is an advantage to the individual who do not pay tax on world income, or who do not pay tax until the tax return is agreed, or who feel that they can illegally evade tax by the hiding the interest income. FATCA and CRS and other reporting mechanisms make the latter more difficult than for the most of blatant criminal. Some offshore banks offer banking services that may not be available from the domestic bank, such as anonymous bank account, higher and low rate loan based on risk and investment opportunity not available elsewhere. The number of the jurisdiction offering anyone anonymous account or the bear share has fallen considerably in the last 20 years. Offshore banking is often linked to the other corporate structure, such as offshore company, trust, foundation, which may have specific used and also may still have tax advantage and bank security solution incorporated in particular jurisdiction. Bank disadvantage. Offshore bank accounts are sometimes less financially secured than domestic one in recent time. For example, in the bank crisis which swept the world 2018 years, some saver lost funds that were not insured by the country in which they were deposited. You understand? This is the very the marketing risk. Maybe if you put into the big amount, 5 billion of the offshore account of the out of your country, another country, you should buy for the credit default swap. Their credit default swap from the international maybe investment bank or the another bank. Otherwise, maybe that's offshore financial center is maybe default. You understand? Maybe insolvency. In this case, nobody can compensate of your money, 5 billion. Understand? Some saver are lost funds that were not insured by the country in which they were deposited. This is very important. Those who had deposited with the same bank onshore received all of their money back. In 2019, this is Isla of men authority were the keen to the point out of the 90% of claimant were paid, although this compensation scheme and also not the amount of money is returned. The local, maybe onshore account is the same. Onshore account is country by country different. You understand? Some country is the how much the total you can 5 billion. Maybe this bank is default, but the other bank is the compensation. How much percent? You understand? Maybe, but 5%, maybe 10%. You can check up this article before you can deposit of money of their bank. You can 100% trust of your bank, but the other bank is nobody know. Bank is when they can default. You understand? Now is the other, especially in this after maybe pandemic, after during the pandemic is the world every economic and maybe economic ecosystem is the very quietly change into the of themselves. You understand? Because of that is the we can tutoring for you like this point is the offshore bank account. Onshore bank account, offshore bank account. Okay, onshore bank account your country. Understand? You can deposit it yourself. But the offshore bank account you can do it. But sometimes the offshore bank there is many favor, but they cannot guarantee to the payback money whenever they can default. You understand? Default and insolvency cannot do it. You understand? This is a very important one. Because of that, maybe they cannot do guarantee to the credit default swap. I understand. In this case, you can buy up the credit default swap, pay for some premium for the investment bank and the insurance company of yourself in their country. The small country is maybe the Cayman Island. They have no money. They have no power background. You know, money source. 9 years is island of men of the authority were the keen to the point out of that 90% of the claimant were the paid. Although this only referred to the number of people who had received the money from their depositor compensation scam, then you check up this one. Maybe some banker, some maybe the bank, they have by of the credit also total return swap of your product, the deposit product. In reality, is only 40% of deposit fund had been repaid 25% approximately in September of 29 and 15% of December 29. In reality, Swaziland, Luxembourg, and also other offshore jurisdictions now often have some form of the compensation scam. You understand? Indemnified compensation scam. They have a scam, but this is maybe Swiss, Swaziland, and Luxembourg, maybe Belgium. Like this country is different one, because they have the backup of the euro and from the Euro Bank, and they have there is many big maybe credit default swap of the insurance company and the investment bank in Eurozone over there. The both offshore and onshore banking center often they have a deposit compensation scam. For example, the Island of Man compensation of scam is guaranteed 50,000 pounds of the net deposit per individual deposit, or the 20,000 pounds of most of other category of deposit. Some category, whenever you deposit of money up in there, like this tax haven country, you check up the key. This is the compensation. You understand? Jurisdiction, compensation, how much? Maybe in case that the bank, offshore bank and onshore bank is maybe default. potential depositor should be aware that any deposit over the guaranteed amount are at risk. However, only offshore center, such as the Isles of Man, have refused to the compensation deposit 100% of their fund following bank collapse. The bank collapse is bank default, you understand? Collapse. And the unsure depositor has been refunded in full, regardless of what the compensation limit of the country has stated. Thus, the bank offshore is historically riskier than bank onshore. The offshore bank is the account is very convenient, understand? But they are the very risk is higher risk than of the onshore bank account. You understand? Because of that, you can check it of yourself. Offshore banking has been associated in the past with underground economic and organized crime, thanks to the movies such as of the firms through the money laundering and the following September 11th 21 is offshore bank onshore bank along with the cleaning house has been cause of the helping various organized crime, gang, terrorist group, and also other state and non-state actor. However, the offshore banking is the legitimate financial service used by the many expatriate and international works. Offshore jurisdiction can be remote and also therefore costly to visit. So physical access and can be difficult. This is a problem has been elevated to considerable extent with the event and the realization of the online banking as the practical system. Offshore private banking is usually more accessible to those with higher income because of that cost of the establishing and maintain offshore account. However, simple saving account can be opened by the anyone and maintained with scale fee equivalent to their onshore counterpart. The tax burden in the developed country thus result in the higher proportion of the tax taker being paid by the higher income group in double from time to time. As previously is shelter income is the brought back into the mainstream economic and rep curve demonstrate this tendency. Thank you. I will continue to the number 5 U.S. Secrecy Act, U.S. Secrecy Act of the offshore account. Thank you very much.